So Trump's back, and so are tariffs. Now, this time, he's going bigger than ever with his global tariffs that went into effect on China, Europe, and even our neighbors, Canada and Mexico. The big question is, what does all this mean for investors who currently own real estate, either single family or multifamily? More specifically, what is this going to do to the real estate market? So in this video, I'm going to break down the latest news, explain the recent tariff policy and the effect on the housing market, and show you what these changes mean for investors like you. Let's do this. All right, so starting in February, the Trump administration began imposing tariffs on our trading partners, and the rest of Trump's tariffs were announced April 2nd. They went into effect, and then China is now under 104% tariff from the U.S., and it, of course, retaliated on U.S. imports as well, went up to 84%. And then in the afternoon, Trump announced an additional 21% point hike to China's tariffs, bringing the total to 125%. And alongside that, bringing the remainder of the world's tariff that were announced April 2nd down to 10% for the next 90 days. Phew, a little bit of retrieve. So these tariffs, what are they really? They're really just tariffs or taxes on imported goods, and those usually are passed on to consumers and investors like us. Now, I'm not an economist, so I don't really know exactly what he's thinking is going to happen, but generally what's happening, if imported products become more expensive, it becomes more lucrative to produce those products in our own country. But here's how this works, right? If a retailer imports a $500 washing machine from a country subject to a 25% tariff, the retailer would owe $125 in tariffs to the U.S. government. Now, here's what could happen next. The retailer could try to get the importing country to pay for some of that tariff cost by telling that country it will pay less for the product. Or the retailer could absorb the cost of the tariff and reduce its profit margin. Or the retailer could raise the price of washing machines in its stores. Or the retailer could do any combination of the above. So in this case, the consumer would pay an extra $125 for the $500 washing machine. Now, the same thing, of course, is happening to lumber, steel, HVAC systems, plumbing, phones, right? Almost everything that we consume. And lumber prices are up as much as 63% for key products like 2x10s. Steel prices went up 18% after new tariffs on Chinese imports were instituted. HVAC and plumbing costs are up 12 to 15%, and those are increasing the renovation and construction budgets. Now, of course, we're getting into the real estate side of things. Builders now, of course, pass these costs on to home buyers and anyone who's doing any kind of construction. And so what does all this really mean for the housing industry? Let's talk about single-family houses first and foremost. So first of all, new home construction prices are going to become more expensive. In fact, the National Association of Home Builders already did some math and estimates that the new tariffs would raise the cost of construction of a typical single-family house by $9,200. And obviously, this is going to increase the cost of construction. And this will also affect multifamily as well. Anything that needs to be built is going to be affected by that. But the other thing, and we saw this with COVID and then the run-up with inflation, yes, costs are going to go up, and that's bad. But supply chains are going to be interrupted. And that's also bad because it doesn't matter what I pay, I simply can't get it. So we saw that in COVID when everything shut down, you really couldn't get something at any price. And so what was happening is the construction budget started falling more and more behind. So one way this now affects the renter market is that the cost of construction is increasing, which means that, of course, the cost of housing is going to go up, and it's definitely not going to solve the housing problem that we have at this point. And so what's happening, because the costs are now going up further, it's widening that gap between owning a house and renting something. And it's already the highest in 30 years. The difference, that gap between renting and owning a house, is already wider than ever before, and it's going to get wider. Now, this is not good for the average American, but if you're owning real estate, rental real estate, it's going to be advantageous to own real estate because this is going to drive up the cost of rental property as well. Now, if you do own something and you're doing construction like we are, right? So that means that our cost is going to go up as well, which means that maybe our projections were too low. And typically the way we address that, and so should you, if you're into construction and value add business, is to always add a profit margin and always put at least 10% above and beyond the construction budget you created to make up for that. And then, of course, as we underwrite new deals, make sure that you're underwriting higher costs than they are currently right now, because in the short term, we know what's happening. The costs are going to go up. So the way you deal with that is to underwrite that into the deal. So it's going to affect the way that we buy property on the one hand. So on a short term, that's going to hurt us on the expense side. But on the medium term, what is going to happen is it is going to drive up the demand for a more affordable rental property. So if you are owning or getting into the real estate business and you have rental properties, either single family house or multifamily, then what's going to happen is you're going to see the demand for that housing going up because it's so expensive to build something. So no one's building any more affordable housing. If any housing is going to be built, it's going to be Class A luxury because the only way you can make money and more is in that way. If you look at the permits, they're actually down over 50% over the last 18 months, and they're probably going to go down even further. I would be surprised if anyone's pulling permits to build any kind of large multifamily building. So there's really no solution behind this problem of affordable housing in the United States, which again is not good for the country, but it is good if you own real estate. So if you're serious about scaling your real estate portfolio, now is the time to get into multifamily. So if you want to learn more, then we have this free masterclass called Apartments 101, and it really shows you exactly how to get your first deal done, how to go from a more single family house investing mindset and pivot more into something for a multifamily and using that to scale to become financially free in as little as 1 to 2 years. So check out Apartments 101, and hopefully that will get you to the next level in scaling your real estate portfolio.